Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we're going to be taking a look at the CFDs on gold and CFDs on silver today, updating our counts and seeing what we can make of the recent price action, which has become quite a deep correction at the moment, so much so that I'm now starting to get a little concerned, well, more than a little, that the bullish count, the primary, is incorrect and that the bearish, I should say, alternate is now starting to look more viable. So we'll talk you through that. But before we come in and look at the shorter time frame here, let's just remind viewers who might be new to the channel what we're essentially looking at here. So bottomed in 2016 and we've gone 1, 2, 3, 4, looking for 5, and our pattern here has us as a combination of zigzag W, X wave, Y triangle, so zigzag into a triangle, known as a double free. This can take a multitude of combinations, hence it's why called a combination correction. It could be a flat into a zigzag into a flat into a triangle, a zigzag into a triangle. Okay, that's what we have here. We have a backup for this, which I never did, which I never downgraded. I just said this was my preference for the primary, but we essentially got two primary counts which give us slightly different invalidation points, very close to one another though, so I didn't really feel like disregarding either of them, as the bearish alternate is significantly different in structure and form and where we expect it to finish. So let's just talk about the primary so far. 1780 spot 36 is the invalidation point, and we're within a gnat's cock of it. If we go through this count is invalid. Okay, now the backup for that is this triangle, like so, and you can see why I prefer the combination idea as the primary. This does not make a very pretty triangle, this thing, B to D onwards, and then A to C, we get this very elevated E, and then we come out in a diagonal 1, 2, 3, 4, 5 into 1, ABC. This gives us a deeper invalidation point here. It's 1753 spot 10. If this breaks, this is invalid, so we have to turn around before here. Okay, if we're going to have preserve the bullish count. So let's just assume for a moment that both of these bullish counts break down. What's our alternate? Well, the same thing it's been for a long time, which is it's a flat pattern. Okay, and we look at it like, let's just put these trend lines. Belongs in the triangle count. Yes, it does. Let's turn. Here's the alternate. So 3 is in the same place. We go A, B, C into an A. We go A, 5 waves, B, wave triangle, 5 waves into a C of a B, A, B, C, zigzag. Right? Retracing at least 90% of the A for a flat pattern. Actually 99 point something or other percent we retrace, which is just, yeah, plenty enough for a flat. Almost enough to classify it as an expansive flat, but didn't quite go beyond that point. Then we get 1, 2, 3, 4, somewhere here, 5. Could come back to roughly where we began, at 1673 spot 44, or we could head down to the 123.6 at 1591 spot 44, or we could head down lower to the 618 at 1467 spot 14. Okay, so it could be a deeper correction. So for those of you who are new to the channel, we picked up some new subscribers recently. Quick recap of the flat pattern. We have a 3 wave move down, we have a 3 wave move up, which is either expansive or fails to break the previous high. Most commonly we get what we call an expanded flat, which looks like this, which is the B wave expands beyond where the A began and the C wave completes beyond where the A wave completed. So it would look like that, A, B, C, and the subwave count for this would be 3, 3, 5, like that. That's the most common. Now we did not get an expansive B wave, so we're looking at the next most likely, which is what we call a regular flat, which is when we come down in a back to the top in a B. Essentially we look for 90% retracement but not to breach the highs, which we have here, which is the failure essentially to make a new high, which is what turns it into a correction, you know, which is essentially what makes it a sideways correction, a sideways move rather than a breakout. Okay, The expanding flat pattern, which we spoke about a minute ago, is one of the more common flat patterns and is responsible for trapping bulls at the highs, because for the traders out there who have the very bad habit of buying breakouts at the highs, that's what a flat tends to do. An expansive flat B where you can look very convincing, pull you in, and then come back down lower. Now with a regular flat we come up to 90% and then we come back roughly to where we began. That's quite common, or a little bit beyond. If we do go beyond, we can then aim for the 123.6 target, and if it's a very aggressive C wave we can come down to the 1618 and you can end up with a much more severe flat like that. Finally we have a running flat where we come down in A, we go up in a B, but we finish high in a C. Now this is a running flat, as essentially it is a truly sideways correction at this point. Now this is very uncommon. I wouldn't go as far as to say rare or extremely rare, but it is uncommon in comparison to the other two. As you can see, it is essentially just a sideways correction. Let's just see what I mean. Price has literally just gone sideways with a slight slant from where it began to where it completed, and it's travelled above and below in between. So whereas in a zigzag, for example, where we have a 5-3-5 structure, we can see how the completed correction from where it began to where it finished is very vertical and very aggressive in free wave move. That is not what we have here. We have a move down, a move back, and a move down again. That's obviously a flat structure. Okay, so what else can we look to? Well, we spoke about our invalidation points. We're still bullish for the moment until those break. There's no need that you can have a very, very deep 2. Okay, I've seen a count out which refers to this as a 2. 1, 2. So this being 99.9 whatever percent. Right now, I get very, very skeptical if a 2's that deep. I'm getting skeptical now with a 2 being as deep as we're saying it is here, which is already well over 90%. Okay, around 95%, maybe a little more. Alright, so we're looking at a significantly deep correction, or we're looking at this flat pattern. Now, by the time you get this video on YouTube, you'll probably know whether or not this 1780 level held, or whether this 1753 level held, right? You guys who are on the Patreon, who are on the Discord, will get this today instead and get early access to it, so you might have to wait and see and have the the luxury of being aware of it before it happens, I guess. But either way, this could be ABC or this could be 1, 2, 3. So why would we suspect it to be 1, 2, 3? Well, ABCs tend towards parity. Now they only tend towards parity. That doesn't mean they have to be equal to one another. So the A doesn't have to equal the C. It's just more common, or it tends towards that commonality of parity. In this case, the 3 has already come beyond the 123.6. Okay, not quite the target we'd like to see for a 3, but there is argument that there's still 5 wave substructure in here that's incomplete and could bring price lower. 161.8 would invalidate both of the counts and very much strengthen the idea that this is a 3. Okay, and we'd have the luxury of invalidating both counts. We'd then be waiting for a 4, and then finally a 5th wave to come down to break the lows to complete the wave C. Now, this 3 could be coming in soon. 123.6 is long enough for the 3 not to be the shortest, guaranteed, because it doesn't matter what the 5th wave does. After this, we know that the 3 isn't the shortest, and as the rule goes with impulse waves, which this is inside of a C, as it has not overlapped or created a diagonal structure or a wedge structure, and therefore the 3 will be longer than either the 1 or the 5. It can't be shorter than both, and we've already got it longer than 1, so good chance that it's a 3. Now we've also got, however, very strong oversold conditions here. I should say very weak. Strong oversold conditions, meaning weak price action. Okay, now down to below 20, around to 23 now on the RSI. Very bearish price action also from a reverse, what looks very much like, see, now you'll have the luxury of hindsight with this deep correction. The move from the high to the low MACD to a higher high than all of this, but a lower high than this, and then a strong move down that takes out all the previous lows, that looks like the behaviour of a flat pattern from a momentum point of view. Strangely enough, regardless of where you put it, it's a very flat kind of structure. And that's what we're dealing with here. We have the strength in the top of the 3. A and B comes back to where we were in the 3, but it's weaker. Right? And you can see here, here's the RSI reading in the 3, here it is in the B. Slanting downwards, it is weaker. Okay? And then we thrust back down into oversold conditions. So, it could be a deep 1-2. We're not writing that off until it's invalidated. Alright, just preparing the ground to say, well, maybe this oversold condition is the 3, and then we'll cool off into neutral territory in the RSI. We will not get another overbought reading, not in a way 4, because we're looking to not overlap here. Into neutral territory, and then we'll roll back over into oversold, perhaps with some bullish divergence for the 5th between where the 3 was and where the 5th was, giving us a sign that the bears are getting tired as they come down below this level. Now, they can come deeper, they can come back to roughly where we were, 1673, but they can come down to the 123.6 at 1591 or the 1618 at 1467. Right, so it could be a deep correction. We won't worry about that until the until the invalidation of the bullish counts and the progression of 5 waves down here. Right, if we go beyond the lows, we can concern ourselves with future targets. Okay, but for the meantime, just expecting a regular flat pattern as the alternate seems perfectly acceptable to me, and I've always quite liked this alternate. So I know I'm sounding bearish now, guys. I'm just preparing myself. That's all. If we've turned around and bounced out of here, 1-2, what do you do? Great. Look for another 5 up and 3 back on a smaller time frame, and you're long. Right, but I'm just preparing the groundwork that if the primary breaks down, not to be surprised. Right, so that's how I see things in gold. Let's just do a quick recap of those 2 invalidation levels again. You're looking for 1780.36, could go any moment, today, tomorrow, and then you've got the triangle, which is a bit lower, which is 1753.10. The alternate being a flat pattern with 5 waves down in the C to unfold, likely finding the 3 with the oversold conditions sometime relatively soon. Okay. So let's now move over to silver, and you'll see now why it is I've become more and more suspicious or skeptical of a bullish interpretation, because our only bullish interpretation we had for silver has broken. Okay, so we're going to need to do a little bit of deleting here, tidy up this count a little bit. Leave it in the log and alter it for a moment. Okay, so let's have a quick look at what I mean. Still thinking we're in a larger 1 into a 2, coming off of the lows back in 2020, around the March crash, and we've come off of those long-term lows into a 1, into a 2, but we've now invalidated that and come lower. So let's just talk through how we've done that. Let's zoom in on this thing here. So we had this breakout of this downward channel. We had what looked like a diagonal into a 1, A, B, long C into a 2, but it was all a bit of a head fake, breaking previous resistance, a breakout of downward trending, downward resistance. This would attract some liquidity up here because people do love buying breakouts. It's never a good idea. Right, buy retracements, don't buy breakouts. If you're going up, do you want to buy here or do you want to buy here before going up again? This is obviously the better place to buy. So we try to buy retracements, not breakouts, because you just tend to get walloped with breakouts. I see it time and time again. So A, B, very long C, which has now come back beyond where the 1 began. So this is wrong. So we are very ruthlessly just going to delete the whole thing. Okay, as soon as I can click on the cross, bye-bye. We're left with a bearish interpretation then, in that case. Now, bullish long term, let's not kid ourselves. 1 into 2 is extremely bullish long term, but just more price action to come lower. 1 and 2 into 3 into 4 into 5 is lining up with a larger 5-wave structure within the flat pattern of gold, although we're in a different overall structure to gold. We've made lower lows on 2 occasions now, whereas we haven't in gold. We consolidated sideways into what looked like a triangle and then headed back to the highs. We haven't done that in silver. We've just consistently set lower lows, and in this case, since the high in February 21, a lower high. 2 of them, 1 here and 1 here. So 1, 2, 3 highs successively lower. and a low, and now a lower low. So we're now trending lower. Now, as I mentioned earlier, we are not moving like this, are we? In a violent zigzag. Okay, this does not resemble a zigzag pattern, right? Okay, but it can resemble a double zigzag or even a triple zigzag pattern, and that's a pair, and that is my count. So let me just talk you through it here. A, B, C into a W. X wave was expansive here, and then we have A with a diagonal, B impulse in a C taking the Y lower than the W. Right, double zigzag following the rules, looking okay. Expansive X waves unusual, yes, very unusual, but find me a count which fits better, because this isn't 1, 2, 3, 4, 5, it's overlapping. Okay, so now I do have an alternate, which I'm another alternate which I'm working on at the moment. We'll have to talk about that a little later, because I'm still, thinking it through in my head at the moment. Now, in the meantime, the best I've got for you here is another zigzag here, taking price lower, an A, B, C here, flat pattern, taking price higher in another X wave, and then a 1, 2, 3, 4, 5 into an A, looking for a B, then looking for another C for that final zigzag, taking the Y Z lower than the Y, which took the price lower than the W, and it's just been a series of zigzags gradually bringing price lower. Yeah, it's not pretty because it looks like a big sideways structure, right? But I'm having serious bloody problems trying to get it to work as something else, and sometimes that's just the way it is. It's just a mess. But a zigzag, 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 at least the lows are going lower, right? Which is the whole purpose of several zigzags in a low, is to continue to push price lower with each successive zigzag, and that is happening. Okay, so I could talk myself into anything, I think. Alright, so that's how I see things with silver now. Once again, very oversold, right? Very oversold. So could you argue, let's just play around with an idea for a minute, that it's done or about to be done? Yes, you could. You could take the A, B, C structure that we've just been working with 5 waves that we're looking at in the flat pattern in the C wave of gold, and you could say, well, what if it is a very long C, right? But it wasn't in a 1 and a 2 on the smaller degree, it's the Z wave here, and it has once again brought price lower. Yeah, that could be right. It's a very long C, but we get extensions in C's, We get extensions in A's. Right. This goes beyond the 120, the 1618, so it's very long, so it is more likely to be a 3. If we go beyond the 1618, you've got to give the 3 the benefit of the doubt. And having invalidated the previous bullish count, 1, 2, 3 does fit. 1618 is the most common extension after 1-to-1 for an ABC though. We have broken that now though, so that suggests it's a little bit more bearish. So we'll stick with the previous interpretation for the moment, that it's 1, 2, 3, then into 4, then into 5 for an A, then a B, then a C, and we're just going to drag this thing out to the end of the year, or way out into the end of the summer probably. Okay, that's the best I've got for you at the moment. I'm not very confident. Just to be absolutely honest with you, I'm not very confident all round with how this has been interpreted. It's the best I've got for you at the moment. I am working on another idea on a separate chart, as I don't like to have my unfinished ideas on the same chart. But if I make headway with it by next week maybe, and I think it makes sense, I'll bring it over to here as a possible alternate now that we've deleted our alternate and turned it into the primary. That's deleted our previous bullish primary and now adopted the alternate. So anyway, bit of a mouthful. Hope you've been following that. But that's really all I've got for you in gold and silver. Gold and silver at the moment. I'm just looking for a low to form here sometime soon with these oversold conditions, and I suspect that will be 3 into 4 into 5, similar to what we've got in the gold count, but it will subdivide finally, rather than as 5 waves, it will subdivide as 3 more waves, another zigzag lower, 5, 3, 5, like that. And really what I'm aiming for here is the 61.8% retracement of wave 1 back here. Okay, if we just turn it off log for a minute, we can see that even in linear scale we're still not here yet. Okay, so just expecting to come back into all of this previous structure around here, all of this previous trading range. That would make perfectly normal sense, because that's going to provide us the real support. Because we did whip up here in such a fast zip of a move that there's really nothing here to catch us. You know, I've been saying you break these levels and there's very little below us until we get into all of this previous structure, and that's probably what we're really going to be looking for support, you know, if we do break down further. Alright then guys, that's all I've really got for you today. Thank you for joining me on this technical analysis of gold and silver. I hope you've enjoyed it. If you're new to the channel and you have liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. As always, a huge thank you to my Patreon subscribers. If you're interested in joining the Patreon and getting a whole raft of benefits, then follow the link over to the Patreon page, have a read of the various tiers, and if you're interested, feel free to sign up. We've just gone through halfway through the month. It's up to you. I would always advise to wait to the start of a new month to get maximum value, but you will still get value for money even with half a month to go. And on that note, I've yet to announce this week's live stream. I'm thinking it will probably be the Wednesday for you guys on the Discord and on the Patreon. I will let you know as soon as I know. And take care of yourselves, guys, and I'll be back with you shortly. All the best. Bye bye.